Hey guys, what's going on? I hope you're enjoying your weekends. Look, this is gonna be a very useful video if you're a day trader, if you're a swing trader. You know, one of the most typical questions we get is this. Well, how do I know when to get in? How do I know when to get out? How do I know when to hang in there? How do I know when to jump out? How do I know when to collect against? Because it seems like every time I jump out, then the trade goes my way. Every time it seems like I keep the trade, it keeps going against me. How do I solve this type of situation? Look, guys, it's going to be impossible to address these questions in details in this particular video, but I will give you one very, very good, simple solution to some of these questions that practically on everyone's mind when they're trading. So if this has been a question on your mind, then stay tuned. I'm going to give you and take you for a few examples, show you specifically what to look at. And the most important thing is to just really recognize your responses to what the market is doing. You can use this starting tomorrow to get better results. But just picture a clock before we move forward. And I don't mean the trading clock. I don't mean here when the markets are opening up, let's say at 9:30 in the morning and they close at 4. That's not what we mean. We're going to talk about a psychological clock for trading. Just picture this point 12 on the clock. Picture this point 6 and try to keep these things in mind as we move through the video. But man, gosh, what a Friday. You gotta love days like this Friday, November 2nd. I mean, they're so much fun. I mean, look at this. It all started with the China deal message from Trump. And the markets were rallying like crazy. But apparently, he's the only one that actually thought he had a deal with China. And no one else in the White House even had a clue about it. I mean, look at this poor Kudlow guy. He's like, what deal? I don't know nothing about no deal. Trump, shit, you forgot to tell me that I was supposed to tell everyone that we had a deal with China. I mean, look, guys, this is getting to the point of ridiculous. I mean, just getting desperate. Before these midterm elections, Trump will just say anything he wants to say just for things to go smoothly, and then we'll get a real deal after the election. But looking at this situation, could you think of anything recently that reminds you of Trump's message on Friday, we have a deal with China? Can you think of anything? Okay, I'll give you a hint. How about August? Think about what happened in August that could resemble the situation right here. Guys, when I saw this right here, Trump is like, oh, we have a deal with China. This is what I thought. Guys, funding secured. Anyone out there could see maybe the resemblance right here? Here's Elon Musk on August the 7th, right? Taking Tesla private, $420 a share, funding secured. Here's Trump. Hey guys, I know midterms in about 72 hours here. I'll tell you what, deal with China pretty much secured. Okay, so I don't know about you, but that's certainly resembled me of the Elon Musk twist in August. And a little spoiler, we did trade the markets Friday in the same fashion that we traded the bluff in Tesla funding secured. And for those of you that may be new to the channel, on actually August the 7th, when the tweet came out, we were building some huge positions shorting Tesla. Now, at that point, it was a contrarian bet because clearly when the company's going private, generally the shares would be taken to that level right here. And as everybody was rushing, buying calls, we were doing exactly the opposite. We were buying puts. And so if you've missed that video, there should be a link at the end of this one if you want to check out the details, why we took the trade and some of the thought process that was going through our mind. Okay, but I want at this point to do a quick exercise, and it's going to be a little bit of a psychological exercise. I want you to be 100% truthful with yourself, and I'm going to show you 6 charts. I want you to determine in your mind what are your truthful answers when you're looking at these charts, okay? So on this chart, take a look, and so you wouldn't be swayed. You wouldn't have a particular opinion formed. I just want you to focus on the chart itself. I don't want you to think, well, what stock it is, but at the end, I'm actually going to reveal to you which stocks are these on the chart. So graph number 1, chart number 1. I want you to answer honestly a question. How do you feel when you're looking at this point 12? Does it make you feel like you want to buy calls here? Does it make you feel like you want to buy puts? Let's just leave all the technicalities that you could have studied already, utilized in our chart course. Just leave all of that out for now. It's just a simple answer. Do you feel like buying calls? Do you feel like buying puts when you're looking at this point 12 right here on this chart? Okay, second chart. What do you feel like doing at point 12 on this chart? Point 12, when you're looking at this chart and this nice uptrend, what do you feel like doing right here? Do you feel like buying calls? Do you feel like buying puts? Chart number 3. What do you feel like doing on this chart? When you're looking at this chart, oh man, this is a really good chart. Wow. What do you feel like doing? A point 12. Do you want to buy calls? Do you want to buy puts? What do you feel like doing when you look at this chart? Okay, I'm going to show you 3 more charts. What do you feel like doing at point 6 on this chart right here? Do you see point 6? See this nice drop right here? What do you feel like doing here? Do you feel like buying puts? Do you feel like buying calls? Now be honest now. Be honest. Okay, next chart. At point 6 right here, looking at this chart, do you feel like buying puts? Do you feel like buying calls? What do you want to do as a trader? And last chart here. At point 6 right here, guys, this thing clearly is crashing. Be 100% honest with yourself. Do you want to buy puts looking at this chart? Or do you want to buy calls? And now we're going to go into analyzing this situation. So the first question was, well, how do you feel? What do you feel like doing when you're looking at this point 12 right here? And by the way, this stock that is portrayed here is the stock of Tesla. Many of you probably guessed that. And at point 12, this is exactly when we were posting the video to short the hell out of Tesla, when it was about 375, 385 a share. And this is what happens next. Tesla after funding secured tweet. That's what happens. So it goes from point 12. So think about that psychological clock. Think of this as a clock. Most of the traders were rushing in to do what? They were buying calls on this crazy great news. What appeared at the moment was crazy great news from Tesla. We were doing exactly the opposite of that. Okay, now think about this. What did you want to do at point 6? Did you want to buy puts? Because I know that a lot of traders that actually have reached out to me, they saw this clear crash in Tesla shares and they were just buying puts, but they were buying them closer right here to the bottom. And so, as you know, Tesla shares reversed since then. And so this was probably the worst time to be buying puts. Now, psychologically, when you look at this, to you, it's clear. Well, hell, of course it's going to drop. I mean, look at this thing dropping. It's been dropping forever. I mean, there's only one thing can happen at this point. It's going to go lower. Wrong. This was actually the time to buy calls. If you watch some of those videos, we actually did get bullish on Tesla for a short amount of time there. Now, S&P 500, Friday. Take a look at this. This is the action in the S&P 500 futures after deal with China that no one at the White House actually knew nothing about. So initially the futures go higher, and what happens after that? They go significantly lower. Geez, look at this, 2,700. They started at 2,765. I mean, pre-market, they were even higher. They were like at 2,760, 65s. And so, there's the resemblance. And thank God we were able to catch the bluff each and every point in each one of these trades, and we recommended our subscribers to actually stay on the short side on Friday, and I'll show you some more details on that in just a second. So the second question was, what do you feel like doing buying calls or puts? This is actually a stock of BKNG. Literally the day before we were posting the video on this channel saying that it's going to drop $200, and it did. And so if you haven't watched that video, we go specifically showing in that video why we thought, based off the chart, we were actually describing our 5-step process that we use for identifying these powerful reversals in certain stocks. So if you're curious to find out how we made that call, you can review it. I'll post the link at the end of this video so you can check it out. Here we were wanting to buy puts. So at point 12, no matter how bullish this thing actually looked, if you just kind of look at it, I mean, we identified some divergences that made us believe the stock was about to make a major fall. Trust me, it's not that difficult. You can learn how to do that as well. And at point 6, it was actually time to buy calls, not puts, but clearly this is the time when you're looking at this thing, and ideally, the easiest decision to make here is, oh man, it's going to go lower. Let's buy some puts. And so after that, the stock actually rallies. So what do you feel like doing at this point? Okay, this was a chart of, guess what? Look at this. I mean, this is a nice uptrend, guys. This is Amazon right here. This was Amazon at 2,050 bucks. This was Amazon at 2,033. In both instances, we got our VIP alert subscribers to short the hell out of Amazon. And remember, at 2,050, everybody was bullish. Everybody and their grandmother were buying calls because it was just such an easy decision to make. Look at this uptrend, of course. But the question is, how did we identify the reversal? And more important question, how can you learn how to do that? And so if you're curious, it all starts with scheduling a 20-minute coaching call with our senior traders and getting all your questions answered. If you have any questions about trading options, anything like that, just get your questions answered, because everybody, if you've been following the markets, you know what happened to Amazon after that. And so we were able to utilize the charts and the 13 market moves formula to actually figure out this drop in Amazon and in the general markets as well. And from the standpoint of trading options, because options, they're all about timing. So if you get the timing right, it actually, because stocks drop much faster than they climb, it makes sense to actually profit from short-term options on the put side when stocks drop. So if you're not sure how to do that, take action, click the links below this video, and get all the questions answered that you need to become a better trader. So maybe you've been bullish for the last 10 years. Guys, this is not the time to be bullish. The markets in the next 2 years, they will continue dropping, not without short-term rallies. So can you imagine how much more of a powerful trader will you become if you know how to profit from both the rises and the drops? But clearly, if you're looking at this chart right here of Amazon at 0.6, when it just looked like it's beyond the point of return, like it was going to crash even more, what did you want to do? I hope you were truthful to yourself, because anybody looking at this chart, unanimously, 99% of the people, they say, well, without knowing that this is the stock of Amazon, right? 99% of the people say, well, I'll buy puts. Looks like it's crashing. Okay, so there's some of the examples. Here's the main thing. Okay, so points 12 and 6 on these charts, they actually represent extreme points on the psychological trading clock. They actually represent the tops and the bottoms. Now, it gets a little bit more complex when you're actually trading, because you're not going to be able to nail the top and the bottom each and every time. So if you'd like to learn more about what to do in all the other cases when you're not nailing the tops and the bottoms, get some more information by clicking the links below. But in this video, I will disclose a very simple solution that you can use again starting tomorrow. So what do you do and how do you figure it out? Again, remember, these are going to be the absolute tops and the absolute bottoms. What we want to figure out, what if you don't get in at the top, which a lot of times when you're on the short side, nailing the top is going to be difficult. So what if you get at 10 o'clock and the trade starts going against you? What do you do at 12? Okay, what if you're on the call side right here at 4 o'clock, and instead of the stock going higher, it actually goes to the low of 0.6. So do you cut your losses here? Do you add to the position? These are some of the questions you really have to answer in advance. And throughout the day trade, right, throughout the day, you're going to experience all sorts of emotions. So you need to acknowledge, how do you react to your positions? And that's going to actually give you the biggest psychological clue of what you should be doing. Now, oftentimes you will actually need to do exactly the opposite. But these trades, especially if you're trading weekly options, guys, the market will test you to the limit. I mean, at times you will feel beat up. At times you'll feel like the market is just completely beating you up. I mean, at times you're going to feel extremely happy when the trade is going your way. At times, you're just going to be mad and frustrated because you just jumped out of the trade and you should have been really being added into the position. So the psychological day trading clock is going to take you through all kinds of emotions. But it's being able to recognize these emotions is what's going to make you a better trader. And I'm going to give you some really good examples in just a moment. So you'll be faced with many challenging decisions depending on where exactly you may be on your trading clock that day. And so it does get a little bit more complex because you have to make decisions what to do at 2 o'clock, 7 o'clock, 10 o'clock, and so on. Well, there's a number of things that we look at actually to determine, what to do at each particular time interval as the trade progresses. And so it's impossible to describe all of it here, but again, the main solution I'll give you here in just a second, guys. So for the purpose of this video, we'll give you this very simple but very reliable psychological strategy. Now, very important before we do that, to understand this, you will not be able to nail the top and the bottom each and every time. But hey, don't feel bad about it. I mean, it's cool. No worries, guys, because even the most sophisticated algo programs out there can't figure out the top and the bottom every freaking time. They can't do it. Look, but there's certain things you can do to increase your consistency, right? So number one, have a process for selecting your trades. Okay, once you understand why you're getting into the trade on either the short side or the long side, it's going to give you the confidence to stick to the trade. And if you're sticking to your strategy, you're going to be able to make better quality decisions as your trade progresses. Now, don't be changing your mind every minute when stock moves up and, the trade could potentially go against you for, a limited amount of time and so on. So just stick to your strategy. And guys, if you don't have a process, if you don't have a strategy, we strongly encourage you to get one because it's going to make things so much easier for you, especially if you're trading short term. Now you will be always faced with two actions if the trade goes against you. Number one, you can cut your losses, and number two, you can add to the position. It sounds simple, and it actually is. You guys, you don't have to be a rocket scientist to be a really good trader, but you have to know, what to look at. And so to keep things simple, okay, we always focus on this channel telling our subscribers, look, do not just build a huge position all at once. Do not, like if your account is $10,000, don't just go and put, $7,500 in one trade and $2,500 in the other trade. That's crazy, right? That's a sure recipe to blow up an account, right? So if you manage your trades, if you know how to scale in and scale out, which we're not going to talk a lot about in this video, but we've recorded plenty of other ones. And again, if you have any questions, just get your coaching session scheduled and get those questions answered. Here's the thing. I'm going to show you an illustration based off some very recent examples of how the psychological clock of a trader works and how you can use it to your advantage. So this is what we were doing Friday. Here's the actual alert that went out to our VIP members right before the market opened on November the 2nd. The market was rushing higher because of this fake Trump-China deal news, okay? And even happy China news. This is what we send out. And remember, at 9:11 a.m. before the market opened, we knew what our strategy was going to be. We were going to short Amazon by buying puts, different strike prices, 1650, 1660, 1670 strike puts that were expiring that day. Now, market failed to close. This is some of the comments that we send out to our VIP alert subscribers to give them a little bit more information. Sometimes we actually start sending the stream of these news as early as 4 or 5 a.m., kind of setting the tone for what our ideas and trading strategies are for that day. So not only you get the alert as a VIP subscriber, but you get a lot of market commentary, a lot of the levels that we're observing, so it makes trading a little bit more defined and helping you make better decisions throughout the day. You understand why these decisions are made as well. So basically, market failed to close the gap, explained actually in the last video that I posted, right? And so 2750, 2765 level was a crucial level for the market to continue higher, but it failed to close that level even on these great fake China news. And here's what we've got. We've got some actual trades that we're going to review and how the subscribers were reacting to them is going to give you a very clear idea of what's going on and how the psychological clock actually works. So here's a situation. At which point on this chart do you think we're getting the message from one of our alert subscribers that reads this? Amazon is flying. Still buying puts? Still in the puts? Are we hold them? At which point in this chart do you think that takes place? And here's an answer. Amazon's still flying, still buying the puts. It was sent at 9:39 a.m. Where's 9:39 a.m. on this chart? Well, 9:39 a.m. is right here, guys. 9:39 a.m. coincides with this purple dot right here. Let's take a look at what happened actually after 9:39 a.m. Oh, what a coincidence. Check this out. There's no way. This can't be possible. Leonardo, you're making this stuff up. Guys, I don't make this stuff up. I deal with a lot of traders every day. And this happens each and every time. So I'm just taking you for a couple of examples. So basically, this particular trader was getting concerned that, he should be closing out his position. Are we still doing the puts? Oh boy. And it actually coincided with the highest price of Amazon that day. So the answer was no, we're adding to the puts. We're buying the puts at this level. So we started buying the puts right here when Amazon opened. It went significantly higher, literally like $10, $15 higher within moments. So if you're staring at your screen, you would be like, oh my God, oh man, I can't deal with this. I'm showing a loss right now. I gotta get out. It looks like it's going to the moon. What the hell is Leonardo thinking today? Man, he probably didn't get no sleep again. This guy, oh man, 9:39. After this, immediately after the subscriber gets concerned to the point where he wants to close out the position, here's immediately follows the drop in Amazon. Here's the next question. At which point on this chart do you think we're getting the message from one of our alert subscribers that reads this? Holy cow! I've never seen my account being so green. And here's the chart. At which point in the day do you think we're getting this? Well, here's the answer, guys. I'm pretty sure by now you're getting a hint of this, right? 106. Well, let's take a look. What happens at 106? 106 was the third low of the day for Amazon. So the subscribers looking at their account, they're like, oh my God, my account is so green. Oh, how nice. I can't wait. If it just drops some more, boy, I'm going to double my account. I'm going to pay cash for my house. Look, all of these are nice and great thoughts, but this is exactly the very moment that you got to start taking some gains. And look, we never advise anyone to completely close out the position all at once. What we do recommend is the easy formula. Sell half, keep half. So whenever you're staring at your account, you're like, oh my God, I can't believe, I could never think that my account was going to be that green. I mean, I only saw it maybe on Leonardo's channel or maybe in some movies, but this is actually happening. This is real. Guys, when you're thinking like, oh man, this is just too good to be true, guys, this is the time when you need to start taking gains. And I promise you, from talking to traders every day, okay, I do know that 99.9% of them, that is exactly what they're not doing and they're not thinking at that moment because things are getting so good. Everything just looks so good. It's so hard to hit that damn sell button because everything is going so perfectly. So again, you got the 12 o'clock on the psychological clock here represented by 9:39 a.m. You got the 106, which would be the 6 p.m. on the psychological trading clock that represent it's time to start taking some gains. These are exactly the opposite. But when, as a trader, are you more likely to hit the sell button? Well, we are going through a put option position here, clearly you would have been taking some losses if you would have been getting out here. And clearly, if you weren't getting out here, you were sort of, missing out on the opportunity to close out your weekly options, which were expiring that day, right? And so the longer we go into the day, even though that time it made even a newer low of the day, options here, they were probably worth just as much as they were worth here because now we were closer to the market close. So it made sense to start locking gains. Not everything, because there was still a chance that we could have had it much lower, maybe $1,640. But at that point, it made sense to start locking some. So whenever you're doubting, right, this is the best thing that you guys can do. Sell half, keep half. Look, you can't go wrong with locking some gains. But if you close the entire position, and let's say Amazon did drop to 1640, 1630, guess what? You would have felt bad because you'd be like, oh my God, I missed out on all these extra gains. Guys, sell half, keep half. I promise you, if you do that, you will be happy that you did in more instances rather than not. Okay, here's another example. At which time on this chart do you think I'm receiving this message from a VIP alert subscriber? Leonardo, are you sure ABMD gonna go down? It just keeps going higher and higher. Look, I'm gonna sell. I'm down 2K already. Basically, this poor subscriber is saying, I can't take this anymore. And so, in your opinion, at which point on this chart are we getting this message from the VIP alert subscriber? Guys, the answer is simple. Guys, the answer is that simple. 946 and 952. Now, you're going to be shocked because this is exactly on the chart is the double top of ABMD on Friday. So this was the message at 9:46 and this was the message at 9:52 a.m. And so we advised, I actually got on the phone with this particular subscriber and I said, no, you want to add to the position. You don't want to sell. And shortly after he was so concerned and he was about to jump out at a $2,000 loss, the stock drops pretty much immediately within 3 hours, all the way to 376. Guys, now, by adding to the position, the subscriber actually turned a $2,000 loss into a trade that's not even losing money, okay? And so, guys, it's important to recognize your emotions. So the point here is, most of the time, you're going to want to jump out what's going to be the worst possible time to be jumping out of your position. So if you recognize, how do you feel when you're reaching for the sell button? And again, this example was based on a put option position, right? So we were profiting when stocks fall, and in the morning, the stock continued to go higher. So the trader was extremely concerned because he didn't want to have a bigger loss. But determine in advance, what are the levels at which you're going to get out? What are the levels at which you're going to add, and stick to your rules and just keep all the emotions aside. The most important part about the psychological clock here is the fact that you should recognize your emotions and use what your emotions are telling you to do exactly the opposite. So the one simple solution is exactly this. Understand when you're desperately trying to reach for the sell button, and instead of sell, you're better off hitting the buy and adding a couple more contracts to your position. And when you're looking at your screen and everything is just, holy cow, so green, what you want to be doing is reaching for the sell button, which is exactly what you don't want to be doing at the time, because everything just looks so perfect and wonderful. You're just mesmerized. You're looking at the screen. It's, wow, perfect world. And in perfect world, things don't stay perfect for too long, so start selling and start locking gains. Key takeaways. Number one, have a process for identifying your trades so you can make best decisions on what to do if the trade goes against you. Number two, if you don't understand the trade, just don't take the damn trade. Or what's going to happen is your execution of that trade will suffer. And your account will suffer as a result. So we certainly don't want that, right? Number three, buy or add more when you are scared to the max. When you're out there, you're like, oh my God, how much worse can this get? Close your eyes and add to the position. Unless something completely jeopardizes the calculations that you have set prior. If everything still holds and just the price action temporarily does not want to cooperate, you should not be scared. And the only time you probably are scared is when you're not sure whether you should have been taking the trade in the first place. Maybe you just bought it on somebody's tip. Maybe, you didn't even look at the charts to see what's going on. Maybe you just looked at something in the news. And guys, please don't take any trades just because of what they're talking on some of the news channels. And it doesn't matter if it's Bloomberg or CNBC or whatever. Have a process. And if you don't have a process, I strongly encourage you to get one. We use a specific, simple 5-step process for identifying divergences on the chart would actually tell us what's about to happen. Now, most of the traders, unfortunately, they act on the information after something already took place. So our goal is to stay a step ahead. And that is why sometimes you look at these videos in this channel and you're like, oh man, he was a bear the other day. Now he's a bull. Oh, I'm going to go buy calls. Guys, don't buy anything when you look at our channel, right? I mean, because a lot of times by the time you see what we're doing, we're already doing exactly the opposite of that. Look, we're buying calls on Tuesday when Amazon was at 1,500. Once it got to 1,670, 1,680 by Friday, when everybody was like, oh yeah, there is no crash. Guess what? When everybody was buying calls, we were buying puts. Guys, these markets, when you're trading short term, things change fast. You got to be able to make decisions quick. You got to get your calculations in advance. So if you're not sure what to do, how to do it, if you don't have a process, please click the links below and take action so you can get yourself a process. Point 4, start selling when you're super happy with how your trade is going. If you're telling yourself, oh my God, I can't believe this. Wow, look at all this money I'm making. Guys, start selling. Sell some. Don't sell everything, but start selling some of the position and start locking in gains. And if the position keeps going in a better direction still, then by keeping and not closing the entire position, you'll be able to even collect more gains. But guess what? If the turnaround is going to happen fast, you've already been locking gains. So guess what? There's no way you're going to be able to make a loss. And if you don't take losses, and if you keep gains, your account will grow. And that's the whole point, isn't it? Number 5, have a plan of what you will do if the trade goes against you. Cut losses, or you're going to add more, but know in advance what you're going to do, and more importantly, at which level. And if you don't understand levels, then you definitely need to understand how charts works, and our chart course could certainly help you do that. Number 6, never jump all in or fall in love with any given trade. Guys, this is some basic risk management, right? If your account is 10 grand, you don't want to just go ahead and put 5-6 grand in one trade and take some other trades with 500 or 1,000. Look, if you're not sure what percentage of your account you should be spending on trades, which everybody's got a little different comfort level with that. If you need a little guidance with some risk management, guys, just get these questions answered, because if you're just guessing there, if you're guessing and your strategy is based on hope and guessing, I can almost with 100% certainty say that probably haven't been making a ton of money trading. And if you haven't, then something needs to change. Something needs to change now, because by using some of the simple strategies that we can share with you, you're going to be able to scale in and out of the trade successfully. You'll be able to take the right steps, the right action when it needs to be taken. And so we're not going to talk in a lot of detail about that. We did post some videos on this channel that go into a little bit in depth with some examples, so check them out. The links should be appearing on the screen here shortly. With that being said, guys, thanks for checking out the material in this video. I hope it was helpful. Take action now. Learn some more. Take a chart course. Take the 13 Markets Movie course, because there's still plenty of time left in this year, as exciting and volatile as these markets have been, for you to make this year your best trading year ever. I'll catch you guys on the next video. Make this week a successful week.